Ayo, it's lagging until very jialat. Okay, hold on. 2 more minutes.
3:35 ah.
没有啦，没这么夸张啊，
Your 2 minutes cannot trust one.
没这么夸张啦。Alright, welcome back to our next episode of Nuggets on the Go. So today we're going to dive in further into our PLB MOAT analysis and how our MOAT analysis helps our clients as well as even ourselves to hunt for the next correct property for you and your family. Let's go. Alright, so if you have followed us on the previous episode, we dive in a little bit deeper into the PLB MOAT analysis to understand a little bit about the whole entire connection on how valuations are being derived in Singapore. Why is that correlated to volume and density, as well as the frequency and the amount of transactions that happen within the project itself. So we hope that everybody had a better understanding into analysis and opinion on how valuation metrics are being done in Singapore. This time around on this particular episode, we want to dive in a little bit deeper on some of the other factors on our PLB MOAT analysis analytics tool, as well as we want to share with you guys a little bit about this very interesting chart that we have came out from our data analytics team. Let me just show you on screen right now. So basically, if you've seen our post, you can head on to our Instagram or Facebook to have a look. So basically, we shared a little bit more deep dive on the point grading system, which is one of the key features of our PLB MOAT analysis. Because sometimes when we want to hunt for the next property, there's so many condo choices available in a particular district or estate, and sometimes we might be a little bit confused about, hey, there are so many projects, or maybe I really like these 5 projects, but how do I rate them even deeper and try to analyze what are some of the key factors that correspond to my family preferences or my own investment needs. So this grading system is meant to be a guide. It can be on a detailed fashion on how much you want to have this level of point system to factor into your purchase decision. We have these 11 factors that includes volume, value, density, which are some of the key factors that we talked about last week, as well as quantum, which was in all of our previous episode when we talk about the quantum effect and how things has changed before 2013 and after 2013, which is precisely the year that TDSR cooling measure came about, and that technically changed the configuration and layout plans within new launches, which then brought on a lot of ripple effects into the current market situation. So these 11 factors are being live data fed into our PLB condominium MOAT analysis tool when we meet up with some of our clients and when we want to dive deeply into some of the projects. So just to give you an illustration of how this works, in case you are curious about how this tool can actually help all of us to determine some of the scoring system. But of course, the disclaimer is that this is technically a scoring system based on what PLB has experienced over the past years. These are the exact factors that we want to consider even when we purchase or invest a property for ourselves, and thus we think that in our own analysis method, we think that these are very useful analysis factors for everybody to consider. But use it to your own discretion as well as your own preferences. But most importantly is that if this is your first property or this is your primary residence, always try to balance with your family's needs and wants. Always try to balance to ensure that yourself and your spouse and your kids, you're all happy, visualizing that you can enjoy your next couple of years living there together as a family. Because most importantly, you guys must be happy living in your primary residence. Of course, when it comes to your second or third property, if it's an investment property, we always advise our clients that you can fully base it on these 11 factors. But if it's your primary residence, do balance with your family's happiness level. All right, so just to give an example, let's say if I am somebody that loves to live near to Bedok Reservoir, because at the strip of condominiums just right across the reservoir, currently there's an MRT station already, there's a downtown line, and maybe I love nature. I want to live near there, and maybe my families are around there, or I'm hunting for school around there as well for my kids. And let's say I'm comparing these 6 different projects. So let's just take these 6 projects for example. You have Aquarius Spada Park, a slightly more mature development. You have Clearwater. You also have the entire waterfront series from Gold, Owl, Key, and Waves. And you just want to see in terms of scoring, how do they fare? Pros and cons in conjunction and comparison with each other. When we select this 6 project, basically what we see on our MOAT analysis is that we will have chart right here in terms of what we call like the power chart, right? So basically in terms of our scoring system, there will be different variations on the 11 projects, and then we take take that range and we develop a final score right here. So you can see like Aquarius Bar Park, this is the final score. Clearwater has this score. Waterfront Gold, as well as Owl, Key, and Waterfront Waves. The score is a combination of the 11 factors. But if you want to deep dive into, for example, the parents attraction factor, you will see that Waterfront Wave have the score of 5 compared to Waterfront Key, whom has a score of 4. So basically, you can then deep dive into certain aspects to see which of the 11 factors have a higher priority based on your own needs. And this is where the beauty of this MOAT score comes about, because you can deep dive into different factors as well as you can reference to the final scoring factor. If you're keen to find a little bit more about the MOAT analysis, basically you can always check in with any of our buyer consultants from PLB. They'll be very happy to run through this with you. If you're hunting for a particular property or you're in the midst of planning to sell your home, yet a little bit worried about your key choices for the next home. So this entire tool cover all the projects in Singapore and they are updated on a live feed status. So everything is updated month-on-month basis. We live feed the data right here so to ensure that it's always updated at any point in time. And now, we want to look at this new analytics tool that we have just came out. Our PLB research and data team has done such a great job in always coming up with a lot of new tools for our audience as well as our clients. And this tool is fantastic from a broad-based research basis to look at some market trends as well as for us to understand a little bit better about the market. Essentially what we've done is that we have came up with this tool to look at the correlation between private residential, landed plus non-landed combined into a full index, as well as to split them up into a different kind of index graph. And we've also decided to pump in the HDB price index together, as well as all the volume of HDB, resale volume, new subsale and resale volume for non-landed, as well as the volume of new and resale for landed as well. So let's have a look at maybe, shall we have a look at landed, all right? For those of you who are very keen on landed property, basically what we'll be looking at this graph is that I can toggle quite a fair bit of things. And what we're going to do is that we are going to make this available on our PLB website in due time. We'll announce to you guys through our social media platforms. And everybody can come in here and you can maneuver, you can play around with this tool. And of course, if you have any questions, do drop us an email into this email inbox right here. So I'm going to flash it up. So this is the official email for our Nuggets on the Go series. You can just email us at insights@plb.sg. If you have any questions that you would like us to answer in the next few subsequent episodes of Nuggets on the Go, just feel free to email us. We're very happy to answer live questions as well. So coming back to the landed property chart. So basically we have combined the property transaction volume together with the price index graph. So I can also remove different graphs if I just want to look at pure landed index graph. And let me just do that for you. So basically when I toggle off the different buttons, what's going to happen is that the lines will then gradually disappear. And what I'm seeing right here now is just the landed price index. So landed price index, of course, this is being derived from the data from URA and Realist. What we're seeing here right now is that you will see just purely landed property price transactions on transactions volume that has been lodged and paid with stamp duty. So that's how URA derive property transactions and their price index as well on a quarter-to-quarter basis. So we have also done it on quarter-to-quarter basis all the way starting from the year 2000 until the year 2022. So these are a full 22 years kind of data point. Basically what we can see is that there's some generic trends that we can all observe. Notice that when prices are coming down, and this is basically derived from the year 2013. So 2013 was actually a very big hit to most of the market price index, because not just the landed property price index came down, basically non-landed price index also had the same behavior trend. And later we can have a look at the behavior trend, or maybe I just toggle it down for you right here. As you can see, non-landed price index also has a dip down here from 2013, because this cooling measure that happened in 2013, basically the total debt servicing ratio was a huge thing in the market. Everybody took time to get used to this. Developers took time to get used to this on how they configure their next new launch, as well as the ABSD has a dramatic effect on this as well. When this came down, you will notice two very significant things. The most significant observation is that you will notice that when price comes down, volume dips. And why is that so? Is that there's this thing called the distortion effect. So for distortion effect, I gave a brief explanation on the last episode as well. But in detail is that distortion effect happens usually in the stock market. Is that when prices fall and prices rise for certain stocks, investors tend to liquidate and exit those stocks that made a paper gain instead of those that made a paper loss in hope that the stocks that made a paper loss, they can U-turn and come back and make a gain again. But by right, the rational investors did study that two stock, and by right, if let's say the stock is not performing well, it has dropped in price due to fundamental reasons, then most of the time it might be more wiser, or it might be more fundamentally rational to actually keep the winning stock and exit from the losing stock, and then pump the balance money into the winning stock instead for it to continue rising. However, when it comes to real estate, the distortion effect has another kind of behavior, in the sense that because real estate is fundamentally more illiquid than stocks and equity. Why is it illiquid? Is that because in Singapore, firstly, there are two tiers of illiquidity. The first tier of illiquidity is that real estate by itself, by and large, for every property transaction, you need time to purchase and exit. On top of having to market a place, you need the property transaction of 2 to 3 months for it to take place at the law firm, CPF board, URA, SLA, and stuff like that. So fundamentally, as an asset class, it is more illiquid than equity, which you can just exit the next day. The second level of illiquidity comes from the onset of cooling measures, because with cooling measures, you have that blackout period for seller stamp duty. The moment you buy a residential property, 3 years, if you sell, you'll be taxed seller stamp duty. Thus, everybody is demotivated to sell within the first 3 years. That then increases the illiquidity, and it also increases the stability of real estate itself in Singapore, which is a good thing. However, when prices drop because of distortion effect, it demotivates everybody to sell, because now I'm holding, let's say example, a landed property. I'm happy staying here. If I know that there's economic kind of change in the market, or maybe because of TDSR and things like that, prices start to come down, then all the more I'm not motivated to sell. And that is also part of the distortion effect, because I will only be more motivated to sell when I see this uptrend movement of my landed property. Because when I see the uptrend movement, I will be more motivated to sell, to realize that gain, that paper gain that is locking profits under my home. I want to exit, take that profit, and maybe buy a bigger home, or maybe buy 2 properties instead of just holding on to 1 property. So technically speaking, when I see an uptrend, the distortion effect also kicks in for the real estate property owners, because then I'll be more motivated to sell, which is why when you see this upline graph, the volume technically picks up here, and that is example of distortion effect. Now let's also then pump in the non-landed private residential property, which are technically the condominiums and apartments. So as you can see, they have the same effect. And if I want to look at the private residential volume, I just toggle on here. So as you can see, in terms of volume as well, when the price index for private non-landed index actually dip in terms of the TDSR effect after 2013, you can see that our volume drops dramatically in terms of resale and new sale. And when price started to pick up ever since 2016 all the way until today, basically volume also technically increases. You can also see this slight dip right here, because during this season we have technically a lack of supply, in the sense that 2017 and 2018 was like the en-bloc season, so there were lesser launches right there. And then after that, it fundamentally just picked up, and all the way until today because of the pandemic from year 2020. So this distortion effect also applies right here. Now, one other observation that we can notice is, let me just bring out the HDB graph, which is very interesting. What has technically happened as well ever since 2017 Q3 is that we are seeing this chasm gap also, not just between landed and non-landed, but between non-landed private residential and HDB price index. So there's this escape in terms of HDB price index from sticking in together with the HDB price index right here. So technically speaking, starting from 2017 Q3, the private property market has this invisible chasm, invisible gap in between these two different asset class. Now, what does this mean as well is that there are two observations. Firstly, this flea or this chasm gap has technically mean that perhaps Singaporeans, ourselves, or most of the buyers, because most of the buyers that happen after the increment in all the ABSD, technically a lot of transactions in Singapore, more than 80% of transactions in Singapore quarter on quarter are made by Singaporeans ourselves. So you can see that perhaps after 2017, and also I think that was the season in conjunction with all the news and debates and topics about 99's HDB coming to zero, the realization of that after balance 60-year lease, withdrawal limits start to kick in and stuff like that, then perhaps there was this flea and more appreciation of private properties in terms of condos and apartments. And we're also seeing a rise in HDB upgraders moving upwards towards private property. So which then might have gave rise to this chasm gap. And of course, the second observation is that at the fundamental level, these two are still in line and run almost parallel ever since 2020. So 2020 also has a different kind of effect that happened for HDB vis-a-vis private, is that firstly, HDB also came under pressure in terms of its resale market because of pandemic. There was a delay in the construction time frame of BTO, which then also gave rise to a huge influx of buyers buying HDB property. Secondly, it was also because private property prices were rising way faster in terms of overall price quantum than HDB property, and that created sort of like a gap between the affordability level. So perhaps a lot of HDB upgraders, or maybe first time HDB buyers, or maybe first time private property buyers, they actually wanted to get into the private property market, but because of the price escape of private property prices, they then fall back on HDB apartments, because generally HDB apartments are bigger in size and things like that, and thus that also increased the amount of transaction volume for HDB resale prices. In conjunction with the delay in construction of BTO flats, then we can see probably this sharp rise that runs parallel to the private property price index. So if I were to put these three graphs together, this is what we see. Three of them run almost parallel, but the very clear-cut thing is that landed prices actually has technically created that chasm ever since Lehman Brothers recovery in 2009-2010. It has never touched private property price index ever again. The second chasm was in 2017, where condo and apartment prices has never touched HDB prices ever again. So thus, we have these two new chasm that has been created. If I were to go to HDB volume, very interestingly, you can also see a very similar trend when HDB sort of index came down. So basically, it also shares a little bit similarities that when price increase, volume increase. When price dip, volume dip. Same scenario. If let's say somebody is holding a HDB apartment, they see the newspaper, price index is increasing, volume is increasing, price is increasing, I'll be more motivated to sell, realize my profit that's trapped under my HDB apartment. So because that gave me an extra bandwidth of profit for me to upgrade to a private property. So the distortion effect applies technically to all three markets in Singapore. And we have come to the end of this episode, so we hope that you enjoy this episode of Nuggets on the Go. Hope that you also stay in tune with the next upcoming episode, as well as we share a few more updates about the market and also chat a little bit more about investing in real estate in Singapore. So my name is Melvin Lim. Thank you for staying tuned with us. If you want to enjoy Nuggets on the go, do tune in and subscribe and download our episodes from Spotify as well as Apple iTunes. And we hope to see you on the next one. Cheers. To see which of the 11 factors has a hierarchy. To see which of the 11 factors, and hope that you and if you want to listen on this on and if you want to